Hello, everyone. This is a message that I'm sharing only with my clients. But it is a message that should be spread across all of America. But, you guys pay my salary. So here I am doing the work that you pay me to do. I have on my desk right now 3 cases where spouse beneficiaries have been sent checks, uh, coincidentally, all from Fidelity, because their spouses died. And the message that comes with these checks is, my condolences. Here's the balance of your deceased spouse's account. And guess what? You can't roll it over. This is not a Fidelity issue. This is an employer issue. It is the employer that determines what distribution options they are going to choose for their plan. So even you might have 2 plans with Fidelity, and each plan will have different provisions because the employers elected different provisions. Now, of course, these beneficiaries are shocked, right? Because you and I know that beneficiaries have more flexibility when it comes to inherited retirement accounts. But here's what's happening, and this is one of the things that I covered in my year-end webinar. If the account owner died before 2020, the old rules apply. And if the account owner died before the required beginning date, then remember back then, there were 2 options, the 5-year rule and the life expectancy rule. Now, under the regulations, the default is the life expectancy rule, right? That's a good thing. But the regulations also allow plans to default to the 5-year rule. And many of these plans do seize that option and default to the 5-year rule. Their position is, you're a beneficiary. We want to get you out of the plan as soon as possible. And so if the account owner died before 2020 and died before the required beginning date, and the plan defaulted to the 5-year rule, guess what happens? In year 5, the entire balance becomes an RMD. And we know a couple of things apply to RMDs. One of them is that you can't roll over an RMD. The most recent call I got was from a beneficiary who received a check for almost $500,000. And he was confused because he's thinking, okay, what's going on here? Long and short of it is, the 5-year rule applies under that 401k plan. His spouse died before the required beginning date, died in 2018. So 2018, we're counting 5 years. 2019, we don't count 2020 because RMDs were away for 2020. So 2019, 21, 22, 23, 24. Year 2024 is the 5th year. What happens in the 5th year? When the 5-year rule applies, the entire balance becomes the RMD. RMDs cannot be rolled over, right? So when they send them these checks, they can do nothing but cash it and keep it, which means they have to include the entire amount in income. And again, I'm saying these checks are for a couple $100,000 in some cases, $1 million in some cases, close to $2 million in some cases. So my message here is, when you find out that a client inherits an account, or if one of your clients died, please check to see if they died before the required beginning date. And if they did, then check the terms of the plan document to see if they're subject to the 5-year rule. You want to get a copy of the summary plan description to see what it says. You can send it to me and I'll interpret the summary plan description. It gets worse in some cases. For instance, for non-spouse beneficiaries, plans like the thrift savings plan and some private employers give them only 90 days to get out of there. So they'll send them a check and say, the participant died, it's now 90 days, here's your money. And we know that a non-spouse beneficiary cannot roll over distributions that they receive from any type of tax-deferred retirement account, from any type of retirement account, actually, any type of account, actually. So we want to, even though we tell beneficiaries, oh, don't touch the account until you talk to us, which is good advice because we don't want them to make mistakes that can't be fixed, right? But we also want to say to them, come see me immediately and I'll guide you through, because they're already dealing with the death of a loved one. They can't focus on that stuff. They need your help. And that's why we're here to guide them through the process to avoid things like that happening to them, right? So whether death occurred on or after the required beginning date or not, we want to check to see if there are rules under the plan that could create unintended distributions for your clients. The 5-year rule, of course, applies to a designated beneficiary for debts that occurred before 2020. After 2019, it's the 10-year rule or the life expectancy rule, and that could still be an issue, because if the plan defaults to the 10-year rule, which will be the case for those plans that used to default to the 5-year rule, the only way to get out from under that for an eligible designated beneficiary is to perform a direct rollover to an inherited IRA. Spouse can also do to their own IRA by December 31st of the year following the year of death. So lots of traps for beneficiaries. Please, if you're not sure what to do, call me, email me, whatever your plan allows. But you and I are here to work together to make sure your clients are protected. You're the advisors who know what the rules are. And so you're the advisors who can help your clients. Unfortunately, for other consumers who don't have the benefit of working with someone like you, they're going to find themselves in this kind of hot water. If you have any questions, please do not hesitate to contact me. I know some of you send me emails saying, Denise, I've been researching this. Don't do that. If it's an IRA or employer plan rule, why are you paying me and researching stuff? My job is to get you the answers. My job is to help you save your probably number one resource, which is your time. So send me your emails. If you have a plan with a call me, man. I'll help you. All right. Off my soapbox now, but this thing really concerns me, and I just want to send out a reminder and tell your friends that they should be aware of this, but don't share this video with them. If they want to get videos like this, they need to sign up for my consulting services. That's only fair, right? So thank you. Talk to you soon.